there, Commercial Construction Coffee Talk fans. Thanks for chiming in. My name's David Corson. I'm your host. I'm also the publisher and editor of Commercial Construction Renovation magazine. This is what it used to look like. I got a little halo there, but this is Terry Micklin from Wawa. This was November, December 2018. Always nice to hold it in my hands. And this one was 172 pages. I always like to see what I was doing. Oh, of course, it's lacrosse. Anyway, this was my rec team. I think these were seventh graders, the select team. And anyway, I think we went to the championship that year. I don't know, but I had a really good team, and practice makes perfection. But anyway, I was just giving them a pep talk, probably during a timeout, or I don't know. But it looked like it was really nice weather that day. So anyway, well, like I said, we went 100% digital August of 21. Love handed in the magazine. Perry, I know you're not a Wawa anymore, but thanks for gracing the cover. But it's always nice to hold it in the hands. But it's been an amazing ride since then. And to all you out there that have hit the website, thank you so much. Love you guys out there. So with that said, hey, we're starting Monday. We got a couple of weeks before Christmas. Big weekend on the college football front. Georgia Bulldogs choke. Bama beat them, and well, there were some controversial things that went during that game. You know, it always comes down to a couple plays, or the zebras don't get it right, and there's some very, very unhappy people here in the Peach State. You know, but what are you going to do? You know, they had a good run, a 29 game unbeaten streak, 2 national championships, can't win them all, and I don't know who they're going to play. I think they're playing Florida State in one of those bowl games, but anyway. It was a great game. Thoroughly enjoyed it. You know, I'm a Yankee living in the South, so but I always pull for all the Georgia teams, whether it's Tech, Bulldogs, Oglethorpe, whoever's down, Georgia State. I pull for them all. So, but it was an exciting day, and listen, they had a great season, and you know they'll be back next year. So anyway, with that said, I've got 2 gentlemen up in the Big Apple, one of my hometowns, from way back when. I've got Phillip Ross and Joe Molloy, and they're with a firm called Anchin. They're tax advisors, consultants. They help you kind of just become more efficient on that financial side of your business. So Phillip and Joe, say hello to our audience out there on Commercial Construction Coffee Talk.
Oh, hey everyone, nice to be here.
Yeah, so Phillip's on my left, and Joe's on my right, just so everybody knows. Gentlemen, thanks for finding the time to spend some time with our audience out there. The way this is going to work is I'm going to ask you. We'll do it in 3 parts. You'll tell each of you give us a little spiel on where you grew up, where you went to school, and how you ended up in the tax audit, CPA kind of things. And then we'll talk about lessons learned from the roller coaster that we've all been on over the last couple of years. And then you'll each leave one positive thought or phrase, and then we'll close it out. So with that said, the floor is yours, and either one of you can start. Be my guest.
All right, well, I'll start. Thank you for having us here. We're really looking forward to it and everything, really excited about it. So I'm Phil, and I grew up in New York, just like you did. Went to school at Fordham University, College of Business Administration. So real born and bred New Yorker, and majored in accounting there. Started at Anchin actually right out of school. We have a really great history. A lot of people started at Anchin right out of school and stayed with the firm and went up through the ranks and became partner over there. So starting to work at Anchin, yeah, everybody, considers their career and everything. I was really happy with the work I was doing when I first started. And as we went along, you really get involved in more things, a lot more client interaction, a lot more ways of seeing how you deal with clients. And the focus of the firm has always been on how do we help clients and bring value to clients. And I kept seeing that as, at every different level. So it was great just to stay here, to keep learning. I'm on the financial statement side and the consulting side. I also know taxes pretty well, but I have an expert like Joe here, when things get really complex and everything. And just kept really enjoying, all the value adds we do, and also becoming a little more of a business person. And to all the accountants out there, I don't want to say anything negative, but to be a business advisor in addition to being an accountant, I think is great, and really gives you a great perspective there.
Awesome. Joe, what about you?
All right. Thanks for having us, David. I grew up in Carr Place, Long Island. That's in New York. That's 1 square mile, that town. So it wasn't 1 square mile. 150 people in my graduating high school class. Went to Queens College, graduated with a accounting degree and started right away with a smaller firm. Then I started doing more and more in construction and realized construction tax is the way to be. There's a lot of things to learn and not a lot of people know it. And I just found it very interesting. And there's more and more to learn doing it and how you can help your contractor clients. And then I looked Anchin. I signed on with Anchin because they have a lot of construction clients. And I realized this is how we're supposed to handle clients. This is how we're advisors. Like Phil said, we're advisors. We can help them in more than just the financial statement and the tax return. And that's our approach. We're constantly calling our clients, letting them know about potential changes and all the opportunities that are out there.
Yeah, the reason why actually, listen, I got the press release. Once again, people out there on Commercial Construction Coffee Talk, the way you get on the show is you got to send me something. I got to know you exist. Publicists send it to me. And I thought it was a really, listen, at the end of the year, everybody's closing their books out if you're on a calendar year like myself and you're trying to get everything done. And when I launched my company, I went out, I was with Nielsen and bought our company out. And then I went out on my own in December 17th, 2001. And I'm still standing today. But I told myself, I said, there are three essential people if you're an entrepreneur that you want to have the same vision with: your attorney, your CPA, and your doctor. Those are the three major people that you want to have on your side that know where you stand, and they're going to know all your secrets and how you do things. So you want to make sure that you choose wisely. But in my opinion, those are probably the most important. And the way that the tax code is, it's just it's got more words in the Bible. It's just insane. So I've been with my same CPA since I've been, well, I don't know how many years I've been with him, but anyway, it's been essential to have that person, not only from just doing your books and so forth, but having knowing that when things changes, he'll get to me and say, hey, like when ERTC came into effect, over the last couple of years, a lot of people, I got it in the beginning and then it had gotten dwarfed into something different than when it started. So, and I was trying to tell people about it, but I was in the beginning of it. So it had changed and people said, did you do it? Yeah, I did it, but when it was different. So, it's always good to have people that are in the know. And, in addition, I don't know, do you guys get into the R&D and the tax credits and all that, the grants and all that right now? Because that's a big thing that's happening, correct?
Yeah, it is a very big thing. The law has changed about it as well. We have a separate group that does the tax credit studies, does other tax incentives work. Part of our advisory group, we have a whole suite of advisory services, including R&D credits. And in construction and A&E, so many firms really qualify for it and they're not leveraging those R&D credits. So they really should take a look and see if they really qualify, speak whether to their accountant or if their accountant doesn't have the experience with it, speak to a group that really does the studies and really understand, what that credit could be, because you really don't want to leave money on the table.
Yeah. Can you go a little more into a little more of a definition of what it actually is than just the tax credits or these? Because I was just out at a conference last week and it was full of general contractors, architects, engineers, called Centerbuild. It's part of the ICSC, which is the International Council of Shopping Centers. We had a great event, had a reception out there, but I saw a lot of my buds. We were having this discussion about the tax credits and it came up. So if our audience, I'm sure if you could give more of a definition of better than I can.
Sure, absolutely. And Joe
Sure.
will chime in as well. So it's not coming up with something that's out of this world. It's not the people in lab coats. Really, it's about experimentation. It's about differences in processes, new processes. You could have new products as well. But we know when you do a construction job, whether you're the architect, the engineer, or the contractor, nothing is straightforward. Nothing is easy. You're always going through, how can I value engineer this? How can I re-engineer it? Is there a way to do this more efficiently? Oh, we're going and we're digging and we hit rock, but we hit some other things that environmentally we have to go around. And you have to come up with different solutions and different things. And that process of experimentation, that process where you have to come up with new suggestions, new ideas, you're doing your work a little differently, all of that can qualify to an extent for research and development expenses. And based on your research and development expenses, you can then get, without getting too complicated, there's a calculation to do based on how much you're spending compared to prior years. And you get a credit based on how much you're spending that way. And it's a credit. So as Joe likes to say, the credit is better than deduction because it's dollar for dollar to reduce your taxes. It's not you reduce your income by $100,000 and then you're only saving a percentage of that.
Yeah.
So you want to?
Yeah, so like Phil said, tax credits are great. Reduce your tax dollar for dollar. So when you think about R&D, you say, am I creating or improving a product or a process? Okay, and that's what you're looking. So you could create a product. Okay, I created this product. Every year I'm going to spend time trying to improve this product. Okay, and that counts. Even though you created it in a prior year, you're still experimenting this year on how do we improve it. Process. We're trying to make our process better. We got a new building we got to work on. How do we make it more efficient? How do we install this product more efficiently? Everybody's trying to make their work more efficient. And all the time they're spending to do this, they can take advantage of this R&D credit. It's huge.
Oh yeah. I'm just I have a piece of land up on the lake, and I just finished my budget for for my construction loan, and we were finishing it last time. My wife and she's an interior designer, residential contractor, so we were going through all the line items, whether it was framing or the concrete foundation, the roof, sticks and frames, all that stuff. And I'm like, oh yeah, and he'd sent me the spreadsheet, so I went back to the liaison, and I was like, hey Tom, you didn't have the septic tank on there. You didn't have the trim on there. These are big ticket items that are not cheap. And I don't want you to send that spreadsheet to the hedge fund guys, whatever that we're dealing with, because I don't want them to think that I don't know what the heck I'm doing. And I've had my magazine for 24 years. I come from a construction family, and so it's been interesting, and so when I was looking at the land, when we were talking about the tax rate, I was like, oh, I wonder if I can take advantage of that on this project. I don't even know. So, but like I said, if you're out there and you're a general contractor, you're not familiar with the R&D aspect of it, or you never thought about it, it's an opportunity for you to reduce your tax liabilities and have that credit. It's a nice gig if you can learn about it. And I always tell people, look, if you have if your toilet stopped up, you don't call an electrician to go out and fix it. You call a plumber. So if you want to learn about, R&D tax credits as a AEC firm, don't go to just a regular old CPA. Go to someone that's doing it every day, because they're specialists. Am I right?
Absolutely. And there's a lot of other tax saving strategies that are out there as well. Construction and A&E really the tax code understands, what the business challenges are for construction and A&E. So there's some very, very, taxpayer advantage strategies out there that the IRS has blessed, so that, really if companies are not taking advantage of them, if their report shows $100,000 of income and the tax return shows $100,000 of income, they're not taking advantage of these strategies.
Yeah, absolutely. Now you guys are in the Big Apple. You're basically let's go back March 2020. Construction's booming, cranes all over the place, and here we are 3.5 years later, kind of weathering the storm per se. How did your firm and then help your clients? How did you guys weather that storm? Talk about that and lessons learned that our audience out there in Commercial Construction Coffee Talk might find of interest.
I think based on that, you always sit there and you can never be complacent. You can never think things are going good and they're going to continue to go well. You really have to always kind of be on guard. So when that happened, we really stayed very close to our clients. We were calling each of our clients every week, even more than ever, once a week, just to see how things were going. Are you going to be back on your job sites? Are you not back on your job sites? Did your job stop? Are you limited in who you can bring out there? What do you think is going on with your backlog? What's going on with your workforce, et cetera? So we were spending a significant amount of time, and a lot of that time we were not charging clients for, because we knew if we could help our clients to get through it, then we know we'll have a really good client going forward after that. And helping them to survive was really key in our minds over there. So along those lines, look, we got involved with them with PPP, with ERC. There's a special interplay between the two, which, Joe can go into. We got involved with them with projections, right? Where are you sitting with your projections? Now you have to have brand new projections, depending if this lasts longer, if it doesn't last as long, depending how many jobs open up, et cetera, just so that they had their options set up ahead of time so they could still get tweaked, they could still get changed. But it's always better to have a plan and try to change it around versus not having a plan at all.
Absolutely. Joe?
Yeah, it was busy. It's been a busy 3.5 years advising our clients, like Phil said, with PPP. When that came out, should I go for this? Am I allowed to go for this? We'll go over the rules with you. We'll let you know. And now you took it. Is it taxable? We have to wait for this tax code to come out to find out if it's taxable. How do we go about it? PPP2 comes out. Now they changed the CARES Act. They changed this act. You can get this payroll credit. It was constant discussions, making sure they took, because it was such a hard time, every opportunity they had to make more money or to reduce their taxes or to get more cash, we had to help them, and we wanted to. Because if they succeed through it, then we succeed through it. And that's what we're trying to do. We're helping them any way possible.
Yeah, we tried to even go a step further just to see how it could affect things. So for some of the companies out there that are subject to the federal acquisition regulations, they're doing the FAR regulations. They're doing work and they're getting paid a fee, including their overhead rates. So the way PPP and the way ERC was going to be included in affecting overhead rates was key, because it ended up reducing a lot of firms' overhead rates, which was interpreted by the FAR so that it ended up reducing some of the amounts they would be able to bill. So we work very closely with New York State's ACEC, American Council of Engineering Companies, in trying to get this changed. And as of now, it's still not changed, but from what we hear from ACEC, they're still working on it and they're pushing for it. And, just another thing where you couldn't tell how getting a benefit to help you when you were struggling was going to somewhere down the road have a negative effect potentially. But hopefully ACEC will be successful and win that battle.
Yeah, my wife, she's a registered federal contractor with SAM, and small little jobs. We're not building $30 million, nuclear power plants and stuff. We're pulling off air filters off roofs and just little jobs in and out. And but the FAR thing, for those you don't know, that's a federal thing, and I think there's 56. I don't know. Anyway, you got to learn them all, and they're on every one of your bids that go out there. But it's the government. They're the largest contractor in the world. They've been doing business for 200 and some odd years, and you got to learn all the ins and outs. And but FAR is one of them. So, but it's good to know that all of those see, I didn't even think about that, to be honest with you. What you said about FAR, that there might be an opportunity where you can manipulate and lower your tax burden in some way or fashion by having someone like yourself saying, hey, you might want to try, you might want to do this, and it all adds up. Listen, if you save a little here, a little there, the sum is always bigger than the whole. So, that's kind of the way that that I was looking at things. Looking down the road, do you see any other new, products or so forth, on the AEC accounting side of things, or that people might want to take a look at that that are coming to the pipeline?
Well, I think what's out there is there's talk for the legislation for the research and development credits. The change for 2022, where you had to capitalize those expenses and amortize them over 5 years. There's a lot of talk now, there's a lot of work to hopefully reverse that and be able to expense it directly in the year that it's incurred. That would be a big bonus for getting the credit and also taking the tax deduction over there. That's something that's really good. There's a couple things going on the GAAP, the accounting side for financial statements, which, it seems every single year they try to think of something to change GAAP-wise and everything. You kind of scratch your head and you wonder, it doesn't make sense. And why are they thinking about this and why are they doing it? The last few years we had the change in revenue recognition with 606, which for our clients didn't really have, it was more work, but didn't really change the numbers. Then you had the change in lease accounting, where you had to take a look at long-term leases and basically end up evaluating it for capitalization and setting up both an asset and liability on the books. Now they're taking a look at some changes for how you set up credit losses from your customers. Again, a lot of this stuff may not make sense, but you have people who are thinking about this all the time and coming up with it. But just along the lines of what's going to happen, I don't think you can ever bet against construction in A&E. You know, even here in New York, there's challenges with office space. A lot more people are still working hybrid, working remotely and everything. So there's the question, what's going to happen with some excess office space? There's going to be some opportunities because those buildings are not going away. Those buildings, they're already talking about how do you convert them into residential, affordable, you know, housing, how you change it into maybe some more commercial uses, mixed use and everything. So the more I think we've seen from the construction industry, the more challenges that come up are also the way more opportunities come up as well.
Yeah, the occupancy rate, not to get off the tax side, but the occupancy rate in commercial real estate is it, it, it it's a rough ride coming ahead. A lot of notes are going to come into play next year, and I mean, people are already turning their keys in. I did an event in New York back at the end of September, and we were talking, and a lot of my clients, you know, they have offices in the city, but they're hybrid. They don't come in on Monday, they don't come in on Friday, they come either Tuesday, Wednesday, Thursday, and the occupancy rate is definitely below 50%. Could be 35%, 40. It depends on who you talk to, but New York's not the only. You know, you look at any of the big cities, L.A., Denver, Atlanta. It's just changed since March of 2020. And now with people realizing, hey, I can work. I was working out of my house, so it didn't really affect me. But the people that were working in an office environment then, when worked out of their house, prove themselves, and then the employer wants them to come back to work, and they're like, well, I want to go to concerts, I want to go to games, I want to go to this, but I don't want to come back to the office. Okay.
Mm-hmm.
And you know, I was more productive. I gave you more hours. Why are you gonna make me come back in there? However, some people want to go back in because they you know, they like the camaraderie, the corporate identity of themselves. But that's the biggest challenge, I think, as an owner of a business that has, you know, an office in a city. Do I downsize? Do I keep it? And there's going to be so many cool deals that are out there that are going to happen. And I hate to say it like that, but that's just the reality of it. That there are going to be deals that come out, and if you're liquid with cash, and you're going to be able to find some really good deals as an investment, in my opinion. But that real estate bubble is the occupancy rate. It's kind of scary, you know, to be honest with you. You know, if you're in real estate and you have a lot of those properties in your portfolio, I would be definitely. And listen, we need more affordable apartments. So whatever they can do to figure out, like, whenever I see an article in a newspaper or online, oh, XYZ retailer is shutting down 20 stores. But if you read about 4 or 5 paragraphs into it, it'll say, yeah, but they're building 10 new ones. So they're getting rid of the dog stores. They're always reinventing themselves, and you know, retailers, especially if they're not building, they're not growing. And for us, renovation is a very cool thing, because if someone else comes in and rehabs it or reuses that for something else, it's new signage, it's new paint, it's new flooring, it's all of those things. It's just like when a hurricane comes in or a natural disaster. It's terrible what happened, but everybody's got to get that rebuilt. So there might be new laws and codes, but the bottom line is it's going to get rebuilt. So it's good for construction, whether it's a facility gig or a new build or a renovation. So you know, I always look at as a positive, or making a positive out of a negative, if you know where I'm coming from. Correct? Right?
Absolutely. Yep. Absolutely.
Yeah. So let's talk about you know, how did you guys handle the you know, were you in the office, you know, in the Big Apple, or were you working out of your houses? How did you guys handle it?
We were hybrid. You know, we had people that were coming in. You know, some people during when it happened, they relocated, at least temporarily. You know, so we were hybrid. I'd say more remote than not. We also spoke with our clients. If our clients were back in the office and it was time to come and to do field work and things like that, and they wanted us there, we were at the client's office. So that was kind of left up to the client. Some clients, for distancing reasons, et cetera, said, don't come in, or come in 1 day a week or 2 days a week. So we kind of left it that way. Now, we're in our new offices now, and we have a lot more people coming in right now. We're encouraging people to come in much more often, not every day, but much more often. And it's, as you said, the camaraderie and the culture, it's really nice. And for the people who are newer to the profession, just the mentoring aspect and the learning aspect is much better for them to be around as well.
Yeah.
That's
Yep.
the big thing. That's the big thing. Like I learned by asking the person next to me the question, going up. Yes, you can Teams them and you can do that, but you don't know what they're working on. You don't know what they're doing. You can just look to your next, walk by the office. How are you? Do you have a minute? Yeah, I got this situation, and we're there to help them. Because that's how you learn. That's how you can learn so much in school, but in your first 2 years of accounting, you learn more than you did in your 4 years of school. Maybe your first year of accounting, you learn more than you did in college. So just helping the people and teaching them manners. All right, I got to make this call. You want to sit in and we'll go over this call together? Yeah, and that's what they do. How they treat the clients. Remember, we got to talk to them about this. These are the lists, and you let them say something, make them comfortable, and you can do it. So I'm a big fan of being in the office, but I get that not everybody can do it. So when they can, we'll be there. But if not, we'll go that way also.
Yeah, I had an architect on my show, a couple of weeks back, and he said, "Yeah, I went to architecture school to become an architect, but really, when I got out, it's more of drawing. You're an artist or whatever, but when you get out there, you're really a project manager because you're really tied to the hip with the real estate guy and the construction guy, and maybe if it's a project management firm, and you're really, they don't teach you that in school, and it's a shocker, I think, to a lot of people that same thing in construction management. If you go and get a construction management degree, they teach you all that stuff. But then when you go out there on the actual site and get your feet dirty and look at it, I think it's a major eye opener. And I don't care what degree you get, if you go out there, once you go out there in the world, it gives you a nice foundation. But when you get out there, it's a whole different ball game. And I've been taking digital classes for the past year. I went digital in 2021. We had a digital magazine. I thought I knew everything. Oh my God, I've learned so much stuff. I learned I left a lot of money on the table. If I would have knew how to use it from a business standpoint, and the day you stop learning is the day you should go do something else, in my opinion. So but the reason why I actually did my event in New York, I had an event in May, and big contractor in the city, and I was talking to people there, and they're like, "Yeah, no one wants to come into the city, and no, it's not, we're dying to, see people and so forth." And I said, "Okay." So I did my event in September, and then I found out, listen, people on LinkedIn, they say they're in New York. They're off where before the roller coaster started, they were actually in New York working. But now they still say New York, but they could be in Connecticut, or they could be in Western Jersey, or where an hour and a half away from the city. And it was an eye opener. But we had a very intimate small event. But for the amount of invites that I sent out, people will come back and say, "Hey, David, I know it says New York, but I'm in Western Pennsylvania, or I'm working out of my house. I only go into the city, a couple times." So it was an eye opener, and that's actually how we got on the conversation of the real estate and the open office space. And I remember when I went to University of Denver in the 80s. It was right after the oil boom and the crash, and all the buildings were all brand new, but they were empty because all the oil guys had gone out. And so it was kind of like deja vu. History always repeats itself, and now in the city, it's happened again, and once again it'll be revitalization. But when I go back to Denver now, oh my God, the city's boomed. I mean, there's been a ton of construction now between Denver and Colorado Springs. It's like one long corridor. So like I said, I don't look at it as a negative. It's just how are we going to weather the storm and move forward in a positive fashion and get things done, because someone's going to have to do something with that space. But I just got a press release yesterday. A guy was doing a sign for a gelato firm in the city. It's somewhere around Times Square. But they were putting up the sign, and I was like, "There you go. Someone's coming in new. They probably found some space that was empty, got a good deal on it, renovated it, boom." And as more and more people come in, even though it's And listen, you guys still have New Year's in there. It still gets packed in there. So we all know the ball drops and all that. And you guys are offices right by the ball, right?
Right across the street, right here. Can see it from our window.
I've done New Year's in New York, but it's good to know that you're there because I'm sure you'll have people going, hey, are you going to do the New Year's gig? Or are you going to have a party at the right? Right?
I'm sure people are going to ask. Absolutely.
Yeah, absolutely. So, if someone was out there and they wanted to get in touch with either one of you and bounce some questions off you, if they, whether it was, what's ERTC? What are you guys talking about, or the tax, tax R&D, or anything else? How would they reach out to?
So they could always go to the Anchin website, which is www.anchin.com, and look for Joe and myself, and also look for the construction group and the architecture and engineering group. If they wanted, my email address is Phillip with 2 L's, phillip.ross@anchin.com. And the phone number here for the firm is 212-840-3456.
My email is Joseph.Molloy, Molloy. All through high school, they spelled it Mall. It's Molloy at Anchin.com.
I was thinking A there, Joe. I'm telling you, I was thinking A. And I presume you guys are on LinkedIn too.
Yep, we're on LinkedIn, all the social media and everything. We have different events that we do and stuff, so people can be on the lookout. Well, not only do we send out email blasts on them, we post them on LinkedIn as well. So people can see that there too.
Yeah, the website is probably the best idea. Go to the website and you'll see any recent alerts that are out there. You'll see some other information about the construction group, and our contact information is right on there.
So if you're out there, you want to bounce some questions, www.anchin, correct.com? Anchin.com. Go check it out. And these gentlemen are professionals. They do it every day, and they're experts, and they can help you out and point you in the right direction. If everybody wants to reach me, I'm at davidc@ccr-mag.com. Like I said, that Joe and Philip got on here by their press release that was sent from their PR firm. So, that's how you get, I always tell people, and I know you always hear me say this, but if you don't buy a ticket for the lottery, you can't win. You don't send me something, I can't look at it. And listen, we post all sorts of stuff up on the web these days. I mean, before the roller coaster started, it was mostly all construction, but now people found out that there's actually more to life than just work. And so I post all sorts of stuff in there: how to buy insurance, how to buy the right cell phone, how to buy hair extensions. Half my circulation is female. So, and I'm sure there might be some guys out there that want to wear them too. Who knows? I have no idea. But the bottom line is I'm diverse on there. And let us be the judge. Send this to us. It could be a charity golf tournament. It could be personnel assignment. It could be an anniversary. It could be an invite to watch the ball drop in the Big Apple. Whatever. We look at it, and very tough to get in the magazine, but we have all the other social media. We're posting all day, and we get a couple million people a month that hit our site. Last year I think we had almost 29 million people hit the website. I don't know what we're going to end up this year, but a lot of people, and we're a destination. I'm on Google, and I'm on a lot of first pages. Most people find us through Google. They come into the site and they go, oh, they got all this stuff, and they become unique users and they come back. So I always tell people, click, you should go there a couple times a month. Just look at news. You'll find leads on there. I mean, we post stuff every day on the brands, on the vendors, and this and that. There's a ton of stuff on there on the site. So, for all you out there, we, like I said before, we really appreciate it. We couldn't have gotten those numbers without you, making us a destination point. So, as we wrap up here, gentlemen, we're at the end of the year. Q4 is almost over. Got about a month left, and we're going to close out 2023, watch the ball drop, and boom, 2024, here we come. So if you were going to leave our listeners with one positive thought or phrase, what would it be as we move forward into the new year? Joe?
I don't know if I have a phrase. I do say a lot of them, but I don't know which is more correct right now. But I would say, like Phil said, there's a lot of opportunity out there. So stay positive. I believe construction's a very cyclical industry. Interest rates are high right now. It's a little hard, but stay positive and talk to your advisor, and they can help you get through it if you go through hard times, and they can also help you through good times as well. Make sure everything goes according.
Bill?
I would agree with Joe. Make sure that you plan. Make sure that you're really consulting with your advisors as you plan, you come up with alternative scenarios. Look, the infrastructure bill has been out there. It hasn't been a lot of spending, at least in our tri-state area over here. We hear, rumblings that there's going to be some more projects coming out. If those projects come out, it doesn't matter which state that you're in, that's going to be a lot of opportunity for everybody. So really look for that, see what you can do to stay in touch with that. And even if you're not doing infrastructure work, there are other companies that do that plus the work that you do. So if they're going to get busy with infrastructure work, it's going to lessen the competition for the work that you get involved with. So that would be some of the thoughts I'd leave you with.
Yeah, nothing wrong with diversification. My gig is never ever quit. It's just one of those things. There's gonna be sunny days, there's gonna be some cloudy days, there's gonna be some rainy days, there's gonna be some snowy days. You can't control that stuff, and you can't let the poo-pooers get to you. Get rid of the negativity. Keep your blinders on. Stay positive, and for the most part, for the most part, the percentages are on your side that things will work out. You just got to stay positive and don't ever quit. Finish what you start. That's what I used to tell my son. Just finish what you start. That's the biggest thing that you can do. So, well, gentlemen, pleasure meeting you both. When I come up to the Big Apple, we'll go grab some lunch or whatever, and I'd like to see the office space. And like I said, people think CPAs and accountants, that's kind of a dry. You got that stigma of just like contractors. They're blue collar guys. Hey, it's not like that these days. It's a completely different gig. You're a crucial element to any business. Like I said, if you're an entrepreneur out there and you're thinking about starting a business, and so many people that I knew that were with corporations went out on their own. Over the last 3 years, they've started businesses, and the first thing I ask them is, "Hey, who's your CPA? Did you get a good attorney? And is your doctor with you?" Because those are the three most important people, in my opinion, that you're going to get through life with if you want to become an entrepreneur. 9 out of 10 businesses don't make it. So if you are standing still or standing, down the road, you'll look back and go, you know what, that was really good advice. And like I said, having a numbers guy behind you looking at things is just a serious asset in your tool belt. Just like you have all the right equipment on your construction site, if you're building a firm, you got to have a good CPA and tax person in there. It's just the reality of it. Right, guys?
We could have said it better.
Yeah, you pay me $20 to say that, but no. So everybody out there in commercial construction coffee talk, listen, you got the holidays coming up. You got about another 2 weeks, and then things kind of slow down, and some people take off Christmas week, some people take off New Year's week, some people just shut down for those 2 weeks. My son's at Boeing, they're shutting down for those 2 weeks. So I got my son coming on for a couple of weeks. It'll be nice to see him. And look, it's been a wild ride on 2023. I still have my seatbelt on, but 2024, trust me, it's going to be a wild ride. So you better tighten that belt up. All right. And it's probably going to get a little more bumpier before it gets smoother. But it'll never be a dull moment. I can guarantee that next year. And construction is going to keep on going. You can't build a hospital in a day, in a week, just like a hotel or a retail store, any of these things that we cover, the sectors. It's just the biggest thing is finding PMs and supers for your project, and hopefully your product, is in stock to get things done. Other than that, if you're an essential business, you're that much ahead of the game right off the bat. And there's a lot of jobs that are, people right now are going through the holidays. They're just about into that holiday mode. But right after the first of the year, boom, it's gonna turn on like that, and the pipelines are gonna start filling up. Just like you said about the infrastructure things, that as a federal contractor, it slows down just like everything else. But boom, right after the first year, they're gonna start rolling in there. And if they don't spend that money, they're not gonna get it the following year. So they need people to do those builds. So, well, gentlemen, say goodbye from the Big Apple. Phil first.
Everybody from the Big Apple, really appreciate being able to come here. Thank you for the invite. Appreciate being able to talk to the audience and everything, and spend a little time talking about what we do and also about the AC industries as well.
Awesome. Joe?
Thanks again for having us. Anybody out there has any questions or just wants to chat, has anything, just give us a call and we can help them.
All right.
And happy holidays.
Happy holidays.
Yeah, Merry Christmas, Happy Hanukkah, Happy Festivus, whatever you want to do. For those of you who don't know, that's a Jerry Seinfeld thing. So before I shut off, I always say, listen, number one, listen, if you're on a construction site, we want you to be safe. Okay. We want you getting home at the end of the day, seeing your kids, eating your wife, spouse, partner, whatever, and catching some Z's, be able to go do it the next day. Number two, I know it's getting, the winter's out, it's getting colder, but look, gotta stay hydrated. You gotta liquefy yourself. So make sure you stay hydrated on the site, because when you get dehydration, that's when you get headaches. That's when that accidents happen. Drink as much liquid as you can during the day. All right. And if you're out there, hit the like button. All right. Hit the subscribe button. This was a great conversation. All right. And we want to find the algorithms and find these guys, and so people can find the story. Okay. Because I think it's well worth it's a nice little, there were some nice knowledge nuggets in our discussion. So please hit the like button. We'd love to be a subscriber. So with that, I'm going to sign off from Sugar Hill, which is about 25 miles north of downtown Atlanta, just below the Beaufort Dam on Lake Lanier. Lake Lanier is about 600 miles coastline. If you've never seen it, it's a nice big lake, man-made DNR, flooded the Chattahoochee, and it's an unbelievable achievement. So, but with that said, everybody have a great week. Enjoy the holidays, and we will see you next time on another episode of Commercial Construction Coffee Talk. Phil and Joe, look forward to meeting you in person. All right.
Absolutely.
Sounds good.
All right. Ciao, guys. Thank you. See you.
Yeah.